Hello there, I'm Peter Key. I'm back on my investment, Warren Buffett's investment wisdom. Today is February 3rd, 2026. Now, my video topic is called Patience, P-A-T-I-E-N-C-E. Now, in this video, I share one of the most important lessons that I've learned. This is the title. Now, Warren Buffett once said that the stock market is a device for transferring money from the impatient to the patient, which I think is very true. If you this simple sentence has carried decision of wisdom. Now, many investors fail not because of lack of intelligence, but because of lack of patience. That they panic during market downtime, chase short-term profits, and abandon good investment too early. In this video, I reflect my own investment journey and the mistake I have made or other people's making generally, and share how patience has shaped my thinking over time. I have revisited Warren Buffett's early experience when he bought his first stock at the early age of 11, and the moment that quietly planted the seed for a lifetime of discipline for Warren Buffett for 84 years. If you believe in long-term thinking, steady progress, and calm decision-making, this video is for you. And in this video, you'll learn what patience is a competitive advantage in investment, how emotional decision can quietly destroy long-term returns, and why doing nothing is sometimes the best investment action, how Warren Buffett patience is successful over 8 decades. And now the benefit of there are 3 benefits of being patient. Now, the first benefit is patience reduces mistakes. Most patients lost not because of bad company, but because people panic, rush, or try to be too clever. And the second key benefit is patience allow compounding to work. Small gains, when given enough time, like the snowball rolling, and grow into something meaningful, quietly, steadily, and powerful. Now, the third benefit, patience protects your peace of mind. You stop checking price daily. You stop reacting to news headlines. You start thinking like an owner of a company, not a trader, which trades short time. Now, in short, patience save money, gains wealth, and preserve sanity. Now, my next thing is my personal experience now, or everybody's experience, and the thing is that when we were investing on stocks, when the share prices goes up, we jump in and buy it because we are afraid of missing out. Now, when the stock drops suddenly, crash or bubble, then we sell it out because we want to preserve our money. This is completely wrong. Now, actually, Warren Buffett has this experience at the age of 11, when he buys his first share with his sister, so which is an oil company called City Services, at the $40, and he dropped to 37, and they were panicky, and because they don't have money, and when they bounce back to a few dollars more, he immediately sold it, immediately gaining about $2 per share. And after some short while, it rose to $200. So this is a lesson that he learned, planted a seed in his mind, that if you keep this stock for a longer period, being patient, then he would learn 5 times more. And this is what will happen, but we don't learn. We make mistakes again and again. So I'm something device a method which Buffett learned from his boss or mentor or teacher, Benjamin Graham, which is a famous stock investor. He invented an arbitrary person called Mr. Market. Now, Mr. Market is a very temperamental person. Every day he locks the door and give you a price of a company. Sometimes he give you a very high price, 20% of over 30% PE, and sometimes to 70%. And sometimes when he is miserable and very down, he sells it at a very low price, less than 10 times PE, price earning ratio. Now, you stop buying it at a high price, but when it's very visible, you buy it, and then this is time to buy. Now, also another method is to try to be patient. Now, sometimes when a company have quarterly annual report, and the report's no good, and the price dropped over 10%, like recently the Microsoft, which has a annual report about a week ago, and the market reduces its price to over 10%, even getting lower and lower now. It's down to just 420 from 555, the peak. No, and this is the time you start buying your first share if you jump suddenly, or if you're patient enough. When you look at every stock, there's a 52-week high and 52-week low. That means 1 year high, 1 year low within that year. Then when the price gets to the 50-year low, that means you consider a bargain sale, like Christmas sale, at 50% reduction. Then you go to the shop and buy it because they're a reduction, and then keep it for some time, maybe a year later, it bounces back to the original price, which means you make a double profit, or you wait for the bubble, which you do it this way, and for a good company, and then your losses, chance of loss is very, very small. Now let's come back the conclusion. So what I think, if you follow Warren Buffett's patience method and then become yourself, and you'll be winning. Now this video would my next generation or good friends can share it. If anybody share it and learn the mistakes, then it makes this video worthwhile. Now, I'd like to make a disclaimer. Now, this is not my personal advice for investment. I just share the wisdom. If you really want to advise, get your decision yourself, or have your advice from your stock, your professional people, then that's it. I hope you enjoy and share this lesson, and hope to see you next time in the near future. Bye-bye. Have a nice day. Okay.